So, ladies and gentlemen, today's live is going to be a very short live because I've got so much information to pack for you all. We got movement in the marketplace, but more importantly, it's a very big day. What day is that, Tino? Well, Jerome Powell's going to run his mouth again, talking of that he needs more data. And yesterday, Paulson was talking, Fed speaker was talking about that they have the data they need, but they're not going to make any decisions until they get more data. Thank you very much, Mr. Federal Reserve. And it's all a Anyways, 70% chance that Bitcoin's going to hit this price. What price do you say, Tino? Well, not me. Don't shoot the messenger. Apparently, ChatGPT's come out with a very interesting price prediction, which we'll be diving into. Does it hold? Well, from a macroeconomic perspective, kind of makes sense, but we're not there yet. So let's just hope that everything works out well, because you want an expensive Bitcoin, but you want a cheaper one at the same time. Ain't happening. So in today's live stream, I'm just going to have a scour across the marketplace, what we can expect, what's going on. We've had some good earnings on a couple of banks, and I gave you guys the heads up yesterday. These guys are only making money based on everybody trading. Well, we'll have a look at that very shortly. Going to dive into silver, going to dive into gold, going to dive into this absolute nut job, which we call NASDAQ. What an absolute crazy asset this is. But more importantly, what we can expect from Bitcoin going into today's Powell speech. I'm not really expecting too much from Powell, ladies and gentlemen, given that the Fed can't divulge in the information that they already have behind closed doors, because they are still lacking the non-farm payrolls and, of course, the unemployment rate, which is not being given by the Bureau of Labor and Statistics. So there's a little bit of a problem there. So let's break it all down, explore what's going on, and keep you guys aligned with what we can expect today. So, yeah, NASDAQ doing a little bit of an interesting move, trying to sweep the previous Asian session low, doing quite well to hold on to it. There was a little bit of a gap down here, but hopefully, NASDAQ can sustain itself inside of this range. But let's just get to the program. China being a bit of a pain in the backside. It's come out and said that they are going to be putting limits on 5 U.S. entities tied to South Korea's biggest shipbuilders and threaten further retaliation. That's no good, because it means that we're waiting for Donald Trump to speak. Now, Trump's come out with 100% tariffs. And then, of course, China's saying this. What's Trump going to do? He ain't backing down. No chance. Trump is not going to be backing down, ladies and gentlemen, which kind of puts stocks on a little bit of edge. But let's just get into some good news right now. Check this out. Banks results live. Goldman Sachs profits propelled by investment banking decision. We said that yesterday. It says here that Goldman Sachs quarterly profits rose 37%, 4.1 billion, in a quarter that played to its strengths in investment banking and trading. So JP Morgan reported a rise in profits in third quarter, boosted by gains in its trading division. They're only able to sustain these profits if people trade, but then people get wiped out like they did in crypto. These participants ain't going to be trading, which is why people trade the legacy markets, because in crypto, where do you diversify? You just go into USDT. You just hold on to USDT and hope that you generate a yield. Whereas in the legacy markets, you can go elsewhere. You can start buying ETFs. You can go into gold. Speaking of which, gold has absolutely smashed it. Check this out. Gold sees highest volume in 12 years, surpassing the Mag 7 as a yellow metal soars 57% in a year. Well, let's just go and pay attention to our dearly beloved gold. I mean, it's doing very, very well, to say the least. It's pulling back a little bit, but we got a red vector candle. My opinion, it's still going to keep on going up, and it's not going to stop until we know where we are exactly with the interest rates, and that is fact. As long as we know we've got an end to the rate cuts, then that's when gold will start to consolidate. But gold is just going to continue to move up, ladies and gentlemen, and that's the same thing with silver as well. You can see here that supply concerns is what's driving silver prices higher, according to Commerce Bank. When they go over to silver's price action, we can see straight away that it's doing all right. It's pulled back a little bit, but come on, man. This thing hasn't stopped going up. It hasn't stopped going up. So a little bit of a pullback is welcomed across the board with these precious metals. So just take that into consideration. Now, with that being said, going into the earnings, you can see JP Morgan smashed it with an earnings per share of $5.07 when the estimate was $4.74. Happy days over there. And then BlackRock's come in. Now they hold $13.7 trillion worth of assets. One, look, there you go, 13.37 trillion. That is absolutely wild. And they've increased it even more to be the largest fund or bank that holds so much in assets. It's unbelievable what these guys are holding. So the big question is, guys, is where are we with stocks? A lot of people are asking the question, like, are stocks overly valued right now? Just check this chart out here. The percentage of industries with positive EPS growth, that's the projection. And it's showing here that There's 75% of all the stocks that have a positive EPS growth. So that means there's going to be more flavor. That means companies are still going to be doing well, because even though people see that stocks are overvalued, fundamentally, if they're putting out good fundamentals and doing well with their earnings, it can only lead to the idea that they're going to keep on doing well in earnings per share, because that's what investors look for. It says here that they're around 75%. We haven't peaked out to the 100% mark. That's when we get a little bit concerned. But right now, we've still got another 25% of flavor to continue to the upside. So when you're considering stocks, ladies and gentlemen, put that in, take that into consideration. Yeah, things look like they're going up, and it looks like a lot of things are overvalued, but you've got to understand, even OpenAI turned around today and said that they're going to be ordering 50,000 units of some AMD chips. So look, the liquidity is there for people to take on because the activity is happening. Remember, why would you buy a company in the first place? Why would you buy a stock? Why would you buy a business? You want to know if the revenue's there. Well, OpenAI getting into bed with Broadcom, getting into bed with AMD, it's telling investors future revenues are coming into the company. So they're going to plow into the stock. That's how the business works. Speaking of which, let's just get to the program where we are with the stock market overall. Kodiak. Robots. Maybe, I'm saying this, maybe a potential competitor for AI powered driverless technology. Just have a look. Have a look at this bad boy. Anyway, speaking of which, go into cryptocurrency and understand what the story is over there. Ethereum bleeds. Go over to Ethereum and have a look at where we are with Ethereum and crypto. Well, a little bit of a problem with Ethereum across the board. It does say that we've got outflows of 429 million in the largest single day outflow for Ethereum. They're saying it's a macro event. Of course, it's a macro event, and it's not a structural retreat from Ethereum exposure. What it effectively means is investors have quickly just said, whoa, what the hell's happening in crypto? We don't like this, which proves the point over here. Serious BlackRock ETF warning issued after extreme 500 billion Bitcoin and crypto price flash crash. Let me tell you this. You have got institutional investors in crypto. So before they're going to maintain Bitcoin to the moon and the 4-year cycle and your rainbows and everything else that follows, they are going to maintain what they know. It's not the first time they've played ETFs in the past. They've always played ETFs. And the one key word with ETFs is rotation. So to protect yourself in any times of economic downturn, you're going to go over to the ETFs that supply bonds, treasuries. That's where you're going to go. To back that up, you go over to the bonds market right now and you can see that the 10-year bond market itself is trading higher. Okay, it's now starting to pull back because it looks like risk is starting to come back in, given that the yields are starting to pull back up a little bit, but the 10-year futures are trading positive at 0.1%. So they may have been hedging themselves this morning to protect themselves against any risk, but the fundamental fact is that BlackRock is saying, listen, we are packed with institutional investors that maintain the idea of legacy investing. And that's really important to understand, because if they see that the markets are crashing or Bitcoin has dropped so aggressively, they don't like those fluctuations in their portfolios. So what are they going to do? They're going to go elsewhere. They're not going to maintain the Bitcoin to the moon. That's what we do. We have that. We've got that mentality, but Wall Street doesn't. And when they see these flash crashes happening in cryptocurrency and they all start blaming exchanges, fundamentally, these Wall Street players, they are holding the Bitcoin. Well, it's actually being stored in a vault, but they are holding the contracts of the ETF. So they can't really withstand those whipsaw price action with Bitcoin. Now, fundamentally, BlackRock or Larry Fink has said, Bitcoin and gold is the place to be, okay? So BlackRock has a vested interest in making sure that participants hold on to the ETF because they earn off the fees. They don't hold the Bitcoin themselves. They generate the fees from it. So that's something you got to take into consideration. Speaking of which, let's just go and have a look at where we are with this prediction. Check this out. AI sets odds of Bitcoin dropping below 100K. No. Surely not, Tino. No. Tino, you're spreading FUD. Don't blame me. This is what AI is saying, given that we're all going in there. But is it anything that we already know? Check this out. It says here that ChatGPT has come with the idea that it expects Bitcoin to go to 100K. Now, these are the reasons. Here are the odds, ladies and gentlemen. It says here, the odds of Bitcoin briefly falling below 100K before December 2025 is 50%. It's a bit high. Odds of Bitcoin staying below 100K for the extended period of roughly around 2 weeks is 20%. So we're cool with that. Then it says Bitcoin never reaching or breaching 100K again, 30%. So there's a 70% chance that Bitcoin is more than likely going to do it. Okay. So that puts us in a little bit of a tricky zone. If we go over to Bitcoin's price action right now, we can say to ourselves, okay, what are the odds of Bitcoin going down to 100K? I mean, it's not too far away. Last week on Friday, in one day, it was able to go to 101. Now, if we do see Bitcoin clip that range, ladies and gentlemen, the idea is that the wick is a problem. That's the issue I've got. Who's there? A lot of people. Bids are in. Offers. We had this offer over here just a few moments ago of around 60, not a few moments ago, but it was earlier on this morning. There was around $65 million worth of Bitcoin being sold inside of this range right here. Okay. Now, this is the problem when you've got to understand how order flow operates, right? You've got to make the assumption, right, that these guys that are participating in bids to the downside, that means they're buying. You can see the weight of it. It's 39 million right there. And then you go down 5 million, 1.2 and what have you. And then you've got bigger offers up here. So we did see that 67 million. It's not there anymore. It looks like, there you go, 33 million. But it looks like it's been pulled from the book. But basically what I'm trying to effectively say to you is this. The more bigger orders you see occurring in the book closer to price, the less there's not really that much longevity from the investor to want to get rid of, retain the Bitcoin. The idea is that you retain it and then sell it at a later point, at a higher point, okay? But if they're starting to sell aggressively closer to where price is, that composes a little bit of a problem in terms of commitment from investors. That means they're scalping Bitcoin. They're short term. They want to buy it and then they want to sell it as soon as they can. Because if you're buying like $30-40 million worth of Bitcoin and you see it move up 1, 2, 3%, you're making a nice little return. Do that all the time. Happy days. And then the Bitcoin OG is still adding to his short and he's doing pretty much like he's plowing into it. Could that be a sign that there's more to come in terms of movement to the downside? So you've got to be very careful because I do believe that trust in cryptocurrency right now has kind of faded. Doesn't announce super chat. What a guy. Give me a second, my bro. Why are you getting all vexed for? See, I got liquidated. Now I can't afford my Pattern Watcher subscription fee month. Wow. What do you want me to say to you, my bro? What do you want me to say to you, man? I'm not going to say what everyone's been saying. Manage your risk, do all of that. Everyone got smacked. Everyone got smacked in crypto. You know? This is why it's important that you hedge yourself and diversify. You can all talk about risk management, but you've already got a story with risk management when you start using leverage. So already there's a challenge on the risk when you start using leverage. Okay? Understand, rather than using leverage, diversify your approach to trading by looking at other asset classes, okay? If you all went spot on gold and silver, you'd be all good. And I've been talking about gold and silver for a very long time, okay? I talk about certain stocks. And no, some of you have been killing it on QBTS. I gave you guys the story on quantum computing. Everyone's like, nah, it's not going to happen. All right, cool, bro. You're sitting nicely there. Talked about this at $12. I'm giving you things to dive into. Now, I understand with the idea of where you can put your money and not put it elsewhere and you tax and all of that stuff. I get it. But not everyone's in exactly the same position, all right? But in cryptocurrency, the beast of the game is the leverage. Speaking of which, going into it right now, you can see there's hardly any open interest coming into play. I only pay attention to open interest above half a billion, okay? We're not really getting anything. There's one bout of area right here at 586 million in terms of open interest. All right. If we start going into other charts, we can see here. Let's just refresh this, see where we are. You can see that we've got this interesting point right here with the liquidations going above 111,000 to 112. Everyone is now deciding to start running shorts on Bitcoin. There is an anticipation that everything is going to continue to go to the downside, which marries up to the idea of this story regarding AI. It's talking about macroeconomic data is going to be impacting cryptocurrency or Bitcoin. And of course, because Trump had said what he said about China, that's where Bitcoin reacted. Okay, was it a big ploy from the exchanges? Maybe, we don't know. But the market reacted equally to it, which means that we are prone to news announcements that can impact everything. And the biggest news announcement is Trump's response to what China is doing. If he's going to cause a problem, then we can anticipate the markets are going to drop, because investors don't like the story of trade being discussed and the compromise of, well, the challenge to it, okay? So you've got to really take into consideration, yeah, it looks like a bit of a crazy prediction, but it's not, because Bitcoin is not too far away from it. 10K, Bitcoin can easily sweep 10K move to the downside, and that still will be okay for Bitcoin. It's okay in terms of the ETF, we hope. Going to the ETF balance, it's now gone to 805,466. However, BlackRock's been up to it. It's been dumping Ethereum, which we already know, and it's been getting rid of a little bit of Bitcoin. So 10, 20, 30, 40, 50, 60, 70, 80, 90, nearly 90,000 Ethereum has been offloaded by the BlackRock ETF, and it's gone into Coinbase Prime Deposit. So you can see that they're going to start going into Bitcoin maybe. That is what we would anticipate. Going into the Bitcoin dominance, you can see it's already up by 1%. I do have the idea that it's going to continue to keep on going up. I do believe it's going to go beyond the 60% and continue up even more. And some people just don't want to accept that. They really don't. Your alts got smacked, and that's the worst thing about it. And now people are losing confidence in investing in altcoins, because a lot of people are still stuck in the idea that altcoin dominance down, Bitcoin up, Bitcoin dominance down, altcoin season up. Where was your season? Your season lasted for a week, and that's the worst thing about it. I remember it on X. They were like, big altcoin season, get ready, get ready. Reading of 88 on the altcoin season index, and then it went down to 44. Like, what the hell's going on? So people are getting thrown about left, right, and center when it comes to this altcoin thing, which means that this is where you've got to start saying to yourself, you've got to hedge yourself and protect yourself against these wild events that happen in the marketplace. You have to look at other asset classes, ladies and gentlemen. It's the only advice that I can give you. When you're stuck in crypto, you're stuck in crypto. The only asset class you can go to is USDT. Going to USDT, you're getting a yield of 4.8%. That's where investors are going. And that is evident. And that is a problem, because this goes up, Bitcoin goes down. And that's the problem we've got, ladies and gentlemen. Okay? Now, speaking of which, going into the New York Open itself, looking at Bitcoin's price action, we just go over to the daily chart itself just to give you a little bit of a level, because I do have to make this live short and sweet. So Bitcoin right now is trading below the 5 and 13 EMA. There is an imbalance zone over here, but Powell is going to be speaking later on at 5:20 UK time. Whatever he says, you can't expect too much from him. Why? Because he hasn't got the data. Well, I believe he does have the data, but he can't divulge into the data, because then that goes against the idea of the US government shutdown and the Bureau of Labor Statistics retaining the data. So we can't say too much, and investors are going to be looking for key bits of information on whether or not we are going to get more rate cuts. We already know that we're going to get a rate cut. It's like 97% chance we're going to get the rate cut, which the FOMC is in 15 days. If you haven't subbed, make sure you subscribe, because that we're going to be going live for that. Okay, 96.7%, ladies and gentlemen. So we know we're getting an interest rate cut, but let me explain something to you. The madness that you're witnessing in the marketplace, historically, once the Fed starts cutting, okay, from the peak of interest rates, the market starts to rally up. We've had one rate cut, and that was a measly 25 basis points. That was just for the sake of cutting, all right? We're on the rate path to get rate cuts. That does mean money's going to be cheaper, okay? So please just keep in mind, it is volatile out there, but the marketplace is still going to be projecting to keep on going up until we know when the end or the neutral rate is, where we're going to just stay flat. They want to achieve 2% inflation target, but they're saying that tariffs are going to be a bit of a problem, but they're only saying that it's going to counter only 10% of inflation. Not bad. I'm cool with that. All right. You got Jamie Dimon from from JP Morgan saying that, yeah, tariffs are going to be a bit of a problem. Inflation's going to start hitting everywhere. He always talks doom and gloom, okay? But fundamentally, we're on a rate path that says it's going to get cheaper to borrow money. That is where equities will excel. And you've got to keep that in your mind. Forget the daily price swings. The bigger picture suggests that we're in a easing cycle. And when you understand that, that means, okay, I'm now going to start going into other assets against the US dollar in terms of yield, because the rates on the dollar are going lower. That means I'm going to go over to euro. I'm going to go over to yen. Okay. And then I can start putting my dollars to work elsewhere on higher yields in the stock market. Why? Because it's cheaper to borrow money. So from a corporate perspective, I can now borrow a lump sum at a lower rate and put that money to work in the stock market. That's how the nature of the game works, which is why you always focus on Forex when there's a change in interest rates, because it gives you the sentiment of where investors' heads are going to be at in the future and their idea of risk. Right now, they're all going into gold. They're all going into silver. Supply issues, but more importantly, rates are being cut. So they're going to come away from the yield of lower yields on the dollar and then go into gold, because even though gold is a zero yielding asset, they're just going over into gold because it works in that inverse relationship, okay? No point in holding dollars when I can pick up gold. Okay, and the yield on the dollar is lower, so fiat getting smacked. But that's saying that the dollar dominance, we're close to 100, ladies and gentlemen. We're not too far away. So now you've got more purchasing power. So if you see the dollar moving up and the stock market moving up at the same time, you can see that investors are now able to buy less stock. Well, you buy stock with less demand of dollars. Okay, and that's a win. Sometimes you'll see the transition of the NASDAQ going up, the dollar going up. Okay. And then assets against the US dollar tend to go up at the same time. Why? Well, you've got depreciation on the dollar. All right. Now we're heading into a point where there could be appreciation on the dollar. So anything above 100, all right, say it's 101, you got 1% purchasing power on your dollar. That's what you got to pay attention to, ladies and gentlemen. Okay. Cool. Now, 5-year cycle or 4-year cycle. Do you know what? I was talking about this for a little while ago. Like, the 4-year cycle, it's like, it's now being challenged. The whole idea of it is now being challenged, you know? And that's the thing about it. It's not really doing what everybody wants it to do. If Wall Street wasn't here, this is the question. If Wall Street wasn't here, would Bitcoin go and claim these levels? If Wall Street wasn't here. If Wall Street wasn't here, your 4-year cycle would sustain itself, but you wouldn't get that much of a big price move in Bitcoin, in my opinion. Without Wall Street, you ain't getting nothing. And that's a fact, because nearly 1 million of your supply is in BlackRock. Well, if that hit the market, who's going to be picking it up? Long-term holders are all coming back and selling their Bitcoin. Short-term holders are coming in, buying it for a day or two, and then selling it. That's the problem we got. Shouldn't ETH start making higher lows now, considering ETH Bitcoin chart making potential higher low too? Yeah, look, my opinion, ladies and gentlemen, technically speaking, we're in a bit of a tricky scenario from a technical analysis point of view, because even though you can see price looks like it's coming down, someone could say something, everything shoots back up. That's the problem you've got. You're involved in a macro-driven environment, and you've got to be very careful with it, ladies and gentlemen. Okay? Cool. With that being said, guys, sorry to keep this one short and sweet. The market will be opening in the next 7 minutes or so. Make sure you keep your bets to a minimum. Try and use little leverage. If you're going to use some of it, just make sure it's manageable. Don't put the house down. Keep your risk low. Probe your bets and anticipate that Jerome Powell could give the market what it wants. Otherwise, it's yippee-ki-yay to the downside, ladies and gentlemen. And I'll be tuning into you all later on. Check the TV. Mad love and respect.